All right, traders, welcome to the SPACs Attack, where we talk everything SPACs. I hope you guys are ready to get another monster interview. We got you guys ready. We're going to get into a car-connected data company. If you guys want to find out who that is, stick around. Welcome to the SPACs Attack. All right, traders, welcome to it, the SPACs Attack, where we talk everything SPACs. We're going to go ahead and get into our headlines. We'll get into a great interview. And of course, we got the brains to the show. Yes, it's not Money Mitch. It is Chris Opedia. What's going on, man?
Hey, how we doing today?
Busy, man. Trying to do the best I can to keep us going, keep the energy up, pinkies up. I got a little OJ, so I'm not really too concerned. But one thing I am concern is what's going on, man. This market has definitely dropped down on us. I don't feel it was the SPACs. I feel like it was the overall market. What are you feeling, Chris?
Yeah, overall market's red. I mean, earlier today, I saw only 2 or 3 on the watch list in the green, but we're starting to bounce back. Got quite a few in the green now, but really not any big moves. A lot of 1% or less gainers. And on the flip side, a lot of 1%, 2% losers. So just kind of a sideways day now with, more red than green here.
All right, we'll definitely take a look at the watch list. But first things we always do is take a look at the headlines. What's moving out there? I do see one that I think you mentioned a little bit back that it has about a 6% move. Looks like I'm seeing SMFR. We'll talk a little bit about that when we get to our watch list, but first thing we're going to do is, like always, get to some headlines.
All right, guys. Yeah, so headlines today up first. The analyst note that I saw today was Volta, VLTA. D.A. Davidson initiating coverage with a buy rating and a $11 price target. This comes after Roth Capital also issued a rating on this company. So definitely one to keep an eye on. Again, this is a charging infrastructure play. We've got shares at $8. This one's traded under $10 for quite a while now. But getting the analyst interest now could be worth watching. Then we have Genius Sports, GENI, announcing that they expanded their partnership with PointsBet for the official data with the NFL and fan engagement. We all know by now that Genie has the exclusive NFL data, and these sports betting companies need to partner, need to sign up, with Genie in order to have that data. But we're also seeing the engagement, the customer acquisition, the fan side of things, right? Genie has built a one-stop shop for sports betting companies to partner, where they get that data, they get customer acquisition, and they also get, some of that fan engagement. So we saw that recently with another deal that Genie announced, so definitely something to keep an eye on. We have ChargePoint, CHPT, another charging infrastructure play, company out with news that they hit 150,000 charging ports within North America and Europe. So again, a big milestone for them. They also announced a previous acquisition of a European mobility platform, which has helped them get to that milestone. CHPT, though, one of my favorites. I am long this one in the charging space as we look forward to infrastructure bills and more spending. We do have shares hitting 6-month lows, though, so we're under $18 now. Definitely one to take a look at, keep an eye on in the charging space. And then an EV name out there, Electric Last Mile Solutions, ELMS, signs an agreement with Cox Automotive. This is an important deal as it could give them access to 6,000 service centers, 3,000 partner locations, and 800 mobile technicians nationwide. That includes preventative maintenance, vehicle and collision repairs, and battery servicing. So definitely one to keep on watch here. Then we have one of our LiDAR companies, so Ouster, OUST, announcing yesterday that they will acquire solid-state LiDAR startup Sense Photonics in an all-stock deal valued at $68 million. They said that when the deal is complete, they will establish a new business arm called Ouster Automotive, which will be headed by the CEO of Sense. Ouster aims to have negotiations with 5 automotive OEMs. This is an important one because Ouster, if you remember when we talked about our LiDAR stocks, actually didn't have as big of a business interest in the automotive space compared to some of their competitors. And now they are acquiring a company to go fully into the auto space. So definitely a story to watch for OUST. We did have one rumor reported by Bloomberg. Dune, D-U-N-E, is in talks with Trade Zero Holding Corp. That's an online brokerage that provides free and subscription-based software for stock trading. A lot of people out there, watching our show and familiar with Benzinga know the Trade Station name. So this could, or Trade Zero name. So this could be a big one. Again, we've seen eToro go public via SPAC. We've got SoFi. We also saw Robinhood complete their IPO. So we are seeing a lot of these online brokerages now publicly traded. And then our one deal announced this morning, SNII, so Supernova Partners Acquisition, announces a merger with Rigetti, valuing the company at $1.5 billion. Rigetti is a quantum computing company. So investors in the pipe include T. Rowe Price, Bessemer Venture Partners, Franklin Templeton, and InQ. Also, Palantir is announced as a strategic partner with the company. So Rigetti, full stack quantum computing company, a scalable approach to building quantum processors. They said that the scalability is one of the biggest hurdles to bring quantum computing to the market. They have partnerships with Amazon, NASA, the U.S. Department of Energy, Standard Chartered Bank, and others. They said that many of the world's top problems could be helped by quantum computing. That's something we've heard in this space from IonQ in a previous interview. And they said that they want to scale their quantum computers from 80 qubits in 2021 all the way up to 4,000 qubits in 2026. We did have SNII shares up 2% earlier this morning. And then we did get 2 deals, mergers yesterday. Closing, ticker STWO, was approved. 83% of shares redeemed, will trade as GWH next week. And ITAC approved, will trade as ARBE next week. And then GNRS merging with TheraPlant and True Harvest in the cannabis space, setting a merger vote date for October 27th. And then I already see it in the chat. I know this is going to be a popular topic today. We have Ginkgo Bioworks, ticker DNA, getting hit by a short report today. Actually, almost 2 short reports. Scorpion Capital out, calling the company a snake oil salesman, and some hedge fund partners partner up to pimp the latest synthetic biology scam. They, say another garbage SPAC, and calling it a colossal scam, a Frankenstein mashup of the worst frauds of the last 20 years, referring to the $23 billion market cap, also calling it a U.S. version of the China hustle. Not a lot of positive comments here about Ginkgo. And then Citron Research. This was interesting because Citron had said previously that they would stop with short reports and stop shorting stocks. They actually came out today with a report on Ginkgo as well, saying it's not a scam, it's a scheme, and said that it is a legal one. Said it is the same type of scheme that has made a new generation of investors weary of Wall Street. $24 billion valuation, yet it only has $40 million of annualized actual synthetic biology revenue. Again, if you've watched this show for a while, you know that I like Ginkgo Bioworks. I still own a position in this stock, DNA. We are down over 20% today. I had sold some of mine in that run up to 13. I also sold my warrants previously, but I'm holding shares long here. I continue to believe that Ginkgo Bioworks is misunderstood. A lot of people just don't know what this company does and all the different divisions it is in. This is cell programming that has the potential to impact lots of industries. Company was brought public by Harry Sloan and Jeff Sagansky, who previously brought DraftKings and Skills public. We had an oversubscribed pipe, included investments from Bailey Gifford, Bain Capital, T. Rowe Price, ARK Funds, and Cascade Investment. That's Bill Gates' fund. We also have ARK Funds continuing to add to the positions. DNA is the 21st largest position in ARKG. Kathy adding, over 1 million shares a day. This company also has partnerships with Moderna, Roche, Cargill, Bayer, Thermo Fisher, Berkeley Lights, and Pacific Biosciences. They also have a cannabis division. They have a plant-based food division. I mean, this is a company with a lot of different moving parts, and I just think these short reports, they're not understanding what this company is all about. Again, I am still long DNA. I have reached out to the company for comment, and we're trying to get Ginkgo to come on the show for their rebuttal of these short reports. But not a lot otherwise to say, but DNA, I don't see a ton from this short report here. And there are a lot of great companies and great investors in this company. So obviously, everyone do your own research and know your risk reward, but I'm betting on this company and I'm betting on all those partnerships and key investors that this company has.
All right, I'm going to go ahead and jump in here. Definitely, I mean, like always, we're going to get some short reports to come out in the SPAC industry, and I think you're going to continue to see this. You're going to continue to see kind of these research companies try to take out a company because at the end of the day, there really is more of a positive upside to look than an actual upside right now. And so with that being mentioned, I think that's what they try to do. So they try to attack the upside look of the stock and then bring it down by knocking it on the short report. Now, do I think DNA is what they're saying? I mean, I really don't know too much about DNA. And I think that's what another thing that's happening here. This is a company that I think is not fully understood by retail. And let's say another company that I'd put in that same kind of basket is Palantir. Palantir gets mentioned all the time, yet often a lot of people just don't know what the company actually does. So DNA, if you're listening, Ginkgo, I definitely say come on the SPACs attack and go ahead and let everybody and the retail traders, because that's what's in our chat, let them know what you guys are really all about. I'll definitely send this out to them and see if we can get Ginkgo on right here on the SPACs attack. You guys in the chat, let them know. Come on the SPACs attack. All right, that's going to do it for at least the headlines. Now, I do want to get us over to our interview. We could take a second from the watch list, but I want to get right to our interview, and then we'll get towards the watch list. You guys in the chat, let us know what you guys are watching out there, what's on your radar. And up next, we got an interview that I definitely been interested to hear about. I need to know a little bit more about connected car data to really understand the industry. I know Chris and I have been talking about, autonomous vehicles. We've been talking EV. This is really that next step in that, the thing behind the thing, right? So let's go ahead. Let's get right to it, Chris. Let's do what we do best and unlock some SPACs.
All right, everyone. Yes, super excited. We've got another exclusive interview here on SPACs Attack. So joining us on the show today, we have Richard Barlow, the CEO of WEJO. This company is going public with Virtuoso Acquisition, current ticker VOSO. Richard, welcome to SPACs Attack.
Hey, great to see you.
Awesome. Well, let's dive into questions here. The first thing we like to ask, we are SPACs Attack. We talk all things SPACs and de-SPACed companies. Why the decision to go public via SPAC, and was a traditional IPO also considered by your company?
So we considered the private markets. We considered a conventional IPO. We considered a SPAC. We had pent-up demand from most manufacturers, otherwise known as OEMs, to deliver more quicker. They wanted us to be live in India. They wanted us to be live over China. And we considered the funding options available to us, and the SPAC was the right route for us. And we think you'll be happy with the outcome we'll be presenting later this year.
Awesome. So, before the SPAC deal was announced, one of the things that we knew about the company was that General Motors has been an investor in the company. Can you talk a little bit about this investment and partnership?
Yeah, I mean, General Motors invested at the end of 2018 after a 2-year commercial relationship. They've been an incredible partner. They've been on the board of WEJO, but it hasn't stopped us working with any other OEM. No one else can claim to work with OEMs 1, 2, and 3 by market share in the US. So we got the benefit of GM giving us incredible support, incredible capital, incredible supplies of data. But the flip side is we could then demonstrate that we could monetize at scale. We could handle volumes of data at scale, and that's without doubt helped us then introduce other new interesting investors, such as Heller invested last year, who are a substantial €6 billion tier 1 manufacturer. And now this year we've announced, I heard you mention before, Palantir and our substantial pipe investor, and actually Microsoft. Microsoft don't invest in SPACs; they've invested in WEJO.
Yeah, you got to my Palantir question already. We talk about Palantir a lot on this show because they invest in a lot of SPACs and have partnerships with a lot of SPACs. So, and as Mitch said, Palantir is one of those big data companies where a lot of people don't know exactly what they do. Can you just break down a little bit this partnership with Palantir? What does this include, and how is Palantir getting involved in connected cars with WEJO?
Yeah, so we process as WEJO over 10 trillion data points. We have a data asset of over 8 petabytes. It's huge. It's genuine big data. We process in near real time. We process at peak 400,000 data points every second. And we've looked for partners who can help us bring forward, speed up our distribution to new markets. And Palantir showed to us what they've done with Airbus, where they plugged into 6,000 suppliers. And they said, look, we're plugged into automotive ERP, we're plugged into insurance providers. We've already got great scale in Japan. Working together, you're clearly the market leader in connected vehicle data. We're the leader in multiple markets. We've proven we can fast track distribution. So it became a great partnership to work alongside Palantir. And I'm sure you've seen some of the commentary from the COO where we've been in various sort of media outlets. We're both publicly very proud of the partnership we've built.
Yeah, definitely. One of your comments you already said was talking about OEMs and tier 1, tier 2, tier 3. Jumping off the pages in that investor presentation is that WEJO has 17 OEM and tier 1 customers. So how is WEJO able to land deals with these top names in the space?
Part of our moat is we've been going 7 years, and the first 3 years were tough. We were a pre-revenue business for the first 3-4 years, where we were building relationships with GM. GM didn't just choose us in 2016 and went to a substantial relationship. We had to prove, test, and learn together, and prove we could be trusted with data. Now we're at a point where we have, as you say, 17 OEMs and tier 1 partners sending data to us live. That is unique in industry. We don't take a batch overnight upload. We don't do a WeTransfer. We take a live feed from vehicles or from the OEM's own cloud into our unique environment, now powered by Microsoft, and we provide incredible outcomes. We built an experience in Korea where we're identifying live parking availability, where one car scans the area, and then those insights can be shared with other cars in the area. We're building experiences in Japan with our partnership with Sompo. We've managed to build an incredible array of relationships, but part of our moat is the first 3-4 years was just knocking on doors, just saying, hey, we built this unique platform, never seen before. We can process your live vehicle data.
I'm seeing GM, Ford, Fiat, Honda, the biggest car companies in the world on that list. I'm also seeing Lucid on there. Many of our viewers are familiar with Lucid, of course, that went public via SPAC. So Lucid with cars out, later this year, next year. How did that partnership come to be with this company?
So we've built multiple partnerships, and you mentioned Lucid, you mentioned Cosworth. They are relatively small organizations at the moment, but they've got an interesting view on data. So for us, we want to build relationships with every EV provider, with every OEM. There's a number of other logos that we will be sharing next year, where we're shown to be not only the proven leader in monetization of connected vehicle data, but actually we broadened our overall SaaS offering, where we're becoming the full data ecosystem for OEMs.
So let's broaden it out a little bit. So, connected cars. We talk a lot about electric vehicles. We talk a lot about autonomous vehicles. How does connected cars play into the automotive ecosystem, and what does the market size look like for this business?
So it's sort of the industry's it's some of the industry's been doing since 1996, one way or another, in that they've been embedding hardware in the cars that can make the cars make the vehicles become connected. GM very much since '96 with their OnStar products was embedding this connectivity, and then into the 2000s and the 2010s, more and more OEMs were embedding this connectivity in the car. But the OEMs need to then choose a platform to direct data to. So we work with OEMs as they've been scaling more and more vehicles that have this embedded connectivity. And you may note that we talk about having 11.3 million live vehicles on platform, which then drives our unit economics. But actually, we have a supply base of over 50 million, and that is over 50 million vehicles can be activated by OEMs we're already contracted to.
And then I want to dive into some of the target markets, right? You've got these great partnerships with these automotive companies. But if we look at slide 9 in the investor presentation, it talks about traffic management, advertising, car insurance, car sharing and rental companies, charging infrastructure, payments, roadside assistance. Can you just, give us all the different target industries and, maybe which ones are the most important going forward for WEJO and connected cars overall?
So traffic management is what we call a field of use, which is tens of marketplaces. One of the key markets is mapping. We are working with, for example, Microsoft, where we're supplying data to help them with their mapping products, Azure Maps. But more broadly in mapping and sort of traffic management, we're working with key departments of transport, including in South Carolina, including Texas, including Detroit. In fact, we see 20% of all vehicle movements in Detroit. We're supplying trend information, and it must, and one of the things we've noticed is that most of the contracts we have at WEJO are repeatable revenue. They are recurring contracts, so they're not spot buys. These are departments of transport, these are governor's offices, these are government departments who are subscribing to WEJO to take a continuing and live feed of insights to help them improve safety in cities, help them reduce emissions in cities, help them reduce congestion in cities. So that's traffic management. Advertising, trends again. We get live trend data from vehicles. We know what radio station or satellite station has been listened to. We know if warnings have been listened to or if news has been listened to. We supply trends. And it must be noted, this is trend data. This is anonymized or metadata. This is not PII, personal information data. And I can talk about that later in terms of what we're doing in insurance. So we're supplying to advertisers trends of what adverts are being listened to or being skipped, what radio stations have been listened to in a much more granular fashion than, say, historically has been more survey based. Usage-based insurance, we're launching with Sompo, the world's first end-to-end connected vehicle insurance policy. So we're not interested in UBI in terms of behavioral scoring. We're not here to take drivers' data and for insurers to punish for what they perceive to be poor driving. That's not our business. Our business is to improve the claims management process, to reduce claims costs, improve claims leakage, to recover the vehicle quicker, to repair the vehicle quicker, to better estimate the damage to vehicle, to ultimately reduce insurance costs. That will then reduce premiums. In terms of payments, we are working on on what we call frictionless payments, where we're already supplying toll information to companies, we're already supplying park information, we're already supplying fuel information, such as odo off the car. The next stage is now to do frictionless payments, where your vehicle can pay for your fuel or pay for your EV charging, can pay to go through that toll, can pay for the on-demand or curbside demand parking. And then there's fleet management services. We've got 11.3 million live vehicles on the streets, on the roads of the US, more broadly in Europe, and in China and Asia Pacific as well. By having that broad fleet data, that's hugely valuable to a number of companies. Geotab is one of our first live clients, again with a recurring, repeatable revenue contract. Remote diagnostics. Hella, you'll note that they're an investor of ours already. They're giving us a unique understanding about what additional data could be coming out of vehicles for vehicles to be repaired quicker, or actually not even repaired, but actually to preempt a pending issue with the vehicle in the future by having more live dynamic data leaving the vehicle. And then finally, roadside assistance is, the roadside assistance is fragmented, and as vehicles become more connected, if we can become the platform that can centralize a lot of learnings from remote diagnostics and provide back to roadside assistance providers on a local basis, and a state-by-state basis, then that will save, again, consumers and drivers money and repair vehicles quicker.
Richard, that was awesome to break down all these different target markets. I mean, I think that really helps paint a picture of connected cars and the overall market and what exactly that means, and how it could change the automotive industry, for the better, for forever. A huge market.
Most vehicles, whether it's two-wheelers, trucks, now leaving the dealership or leaving the OEM globally, have embedded connectivity. So this is not a sort of future. This is what we're seeing now. We have schedules of how vehicles are going to be onboarded next year. We're forecasting 30 million live vehicles on platform next year. We have majority visibility of that 30 million vehicles. We know how those vehicles are going to go live. And the key thing for our business is we have repeatable revenues, but beyond repeatable revenues, we understand the unit economics per marketplace. And as we activate more marketplaces, even if our vehicle scale stayed the same, our revenues would scale. But actually, by our vehicle scaling and our marketplaces scaling and our unit economics scaling, it has a double scale effect, and that scales our revenues.
So it was recently announced that WEJO is launching WEJO Studio, enabling access to connected vehicle data anytime, anywhere. Can you talk a little bit about this launch and maybe the overall SaaS platform for the company?
Yeah, so we're ingesting 16 billion data points a day, and we've got substantial buyers with recurring contracts, and they were saying to us, look, we're still having to have 3 data scientists interpret your data for our outcomes. Could you do more of that heavy lifting for us, and we'll pay you more money? So we started by building what we call a sandbox, where we said to the data scientists, come into our data asset, run queries. We'll see what queries you're running, and we'll build our own trends. So one example is a particular company. They came for 3 days. They ran 2,000 queries on our data asset within our own sandbox, and we basically then picked off what the repeatable queries, and then built an environment when, rather than having to do heavy lifting and taking all this data over, we could actually provide a live visualization and live insights of that data. That's sort of beta one of our studio product, and we've got multiple buyers all subscribing to that platform, or as opposed to taking an insight feed or an API from WEJO. But more beyond, our SaaS offering is becoming a true ecosystem where we've got demand from buyers of data saying, can you run our data environments for us? Can you actually manage the data for us? Can you manage our consent processes for us? And we've got OEMs actually asking the same thing. So our SaaS offering, if you look at our service addressable market, which I think you did flash up before on screen, our service addressable market is roughly $60 billion. It's roughly 50-50 marketplace and SaaS revenue. SaaS revenues in the second half of this decade we're already seeing some great green shoots. We're seeing multiple OEM demand from a broader ecosystem offering. We're seeing multiple demand from our substantial buyers of data who want us to just do more of the heavy lifting of data.
Awesome. Great explanation there. Another question we always like to get into on SPACs Attack is, talking about the market and some competitors, right? So we never, want to, criticize the competition too much, but there are some other players in the connected data space. Can you just talk, about the competitive advantages that WEJO has and how it differentiates from some of those other companies?
Yeah, I mean, our key metrics are revenue. We're leading monetization. Live vehicles on platform. We're leading monetization. But if you look at more broadly about where we're offering, our total addressable market or service addressable market is $61 billion. We see our competitors being more conventional cloud providers, and we're showing that we've got multiple OEM demand from our broader ecosystem offering. We're showing that actually we're powering and improving some of the market leaders in mapping because we've got a unique product and a unique asset. We've built incredible OEM relationships, not just with GM, but GM is a massive validation. GM is known for not only being one of the world's largest OEMs, but also their backing of Cruise. We are backed by the same team who backed Cruise. Having that differentiator, but then actually having other OEMs working with us now, all over the world, is a massive differentiator from our competition. Quality and volume of data. No one else can claim to process 10 trillion data points in near real time live from vehicles. That's a huge volume of data, and that's given us unique insights. One of the examples of that unique insights is that we built our own machine learning and an AI department. We don't need to buy in that expertise. We built it. We've machine learned the behaviors of every lane of every highway in the US. We know what to expect as it's happening. We've machine learned if a lane is slowing down caused by congestion, crash, or actually temporary construction work. And that's actually we're quite passionate about that one. Is that I read, I think 3 years ago now, there was over 200 road workers dying every year from injuries on the road from a vehicle colliding incident from these temporary construction work. We want to improve safety on the roads. We want to help the departments of transport improve signage and tell drivers actually ahead there is temporary construction work. Well, the fact we've machine learned every lane of every highway in the US, which no one else has done before, and we've got this a real-time trend, is a huge differentiator for WEJO as a business. And I can go on if you like.
Doing great. Awesome explanations here. Loving hearing, just connected cars. Again, it's a term we hear a lot about, right? But I don't think anyone really knew the magnitude or the size of the market and some of those target areas. So loving this discussion. One of the slides I saw in the presentation was talking about proprietary technology. We always like to talk about competitive edges and proprietary stuff. So can you share a little bit about WEJO's proprietary technology?
Yeah, so in our original 8K, we said we had 24 patents pending and 1 granted. We're now at 33 patents pending. So we have a very clear remit as a business to protect our IP. So our IP is agnostic of cloud provider. And that's because the core processing of data is our own proprietary tech. Our ability to process data in near real time, we're not calling on the utilities of conventional cloud providers. We built that approach so we can, for example, the 414,000 data points a second we process at peak, we can check every data point. That's just one example. And you don't necessarily get the data in the same order from the vehicle. A vehicle has hundreds of thousands of data points itself flowing around its own network. They pick up the data to send to us. It won't necessarily come back to us in the right order. We resort in real time. That's really difficult. To actually be able to provide a real-time pipe back out where the journey is maintained in a trend environment is part of the IP and part of the tech we've built over the last 7 years. And we're going to continue investing in our own IP. As an organization, we've now got over 120 people in our tech, and we continue to scale. But also now the partnerships we've built with Palantir, the partnerships we've built with Microsoft, we're going to the next level.
Let's talk. We've got a slide here about customer engagement. So 73% repeat buys, 98% customer retention. Those are some great metrics, to see from a company. So can you talk a little bit about customer engagement and that retention rate?
Yeah, so we've COVID hurt us all, and we've lost now, I think, 2 customers. And I'd cite those both as COVID casualties. Unfortunately, the key message for us is we have a unique data asset. You know, we are not rebrokering mobility as a service data or mobile data or dongle data. We have a pure, unique supply of data from OEMs, from tier ones that's never been seen before. One of our best buys is Purdue University, and later on you'll see, in this presentation you'll see that they bought from us 20 times. That's because before we came along, it was taking them 2 to 3 years to do research. It now takes them 45 minutes to do the same research because of the quality of our data asset, because of how we actually provide a blend of data from multiple OEMs from millions of vehicles, a unique positioning. And we think that explains why we have such great repeat buy. You know, Purdue's a great example. But as a business, we focus on total contract value. We focus on recurring or repeatable revenue contracts. We're not interested in spot buyers per se. If they are a spot buyer, it's because we want them to sample the data before they go to a long-term contract.
Perfect. So, we also want to talk a little bit about financials, right? You will be a publicly traded company, which with that comes, everyone wants to hear about, revenue and earnings. So in the presentation, we have a estimate of compounded annual growth of 265% from 2021 through 2025. Can you just break down a little bit how this projection was made? What goes into that, triple-digit compounded annual growth going forward?
So the first thing is to say is, I'm looking forward to getting to public markets. I'm looking forward to doing our 10Ks and our 10Qs. It's been a deliberate strategy of ours to talk about unit economics from the start. The key metrics we'll be reporting quarter by quarter will be live vehicles on platform and the unit economics per marketplace, so that so people can form their own view about how we're scaling in terms of new markets, in terms of revenue per market, in terms of live vehicles. So that's deliberate. How did we build this model? It started by we did a bottom-up approach to our model build. We interviewed, working with a third-party agency, over 200 clients or prospects, sorry, where we said, what do you want? What do you want from us? Test our data, give us a feedback about what you will pay for data. And the proof in the pudding, our unit economics ended at the end of last year at 40 cents per vehicle at an aggregate level. This year we'll end the year at over $1, and we'll continue to sort of scale that. And it's because we've got the validation from the buyers. We know who the buyers are. We have over 1,000 buyers every month approaching saying they want to buy data. There is a long sort of gestation time before we can onboard a buyer, because they come in with we want connected vehicle data. We then need to define actually what are the outcomes they want from the data, and then we then either provide them the outcomes as an API feed or now within our studio. So our onboarding time is 6 to 9 months, but we've got a great visibility, and then having that, knowing where the markets are going live, knowing what buyers want to spend in markets. And then on the other side, knowing how our OEMs are going to scale vehicles on our platform with what we have something called preferred partner status, which is near exclusivity in defined markets, gave us a 5-year and beyond view about how we'll scale, how our revenues will scale.
Another question, always with a company going public and also getting some financing from the SPAC deal, right, is you've got your own plan in place to grow the company organically. But my question would be, are you looking at any M&A activity? Is that part of the roadmap going forward? Or are you, 100% focused on just organic driving that growth?
So in our original 8K, we were very clear with our M&A activity. We have an M&A department. We have an EVP of strategy, innovation, and M&A, where she's appraised multiple deals this year. We've walked away from certain deals. We will, where appropriate, if it brings forward a marketplace in new territory, if it brings key IP in-house, we will do key M&A. But critically, our plan is based on organic growth. So anything we do in terms of M&A will be incremental of our organic growth, which we're already seeing.
Richard, before we let you go, we've got some questions here from the chat. That's one of the things we like to do here on SPACs Attack. Our viewers and ultimately some of your potential investors out there. So we have a question from one of our longtime viewers, Sue. asking, how does WEJO play in the smart city area? So that's another term we hear a lot about, smart cities. Is WEJO involved in the smart city ecosystem?
Yes, I mean, smart cities is a broad definition now of helping departments of transport, helping cities improve infrastructure. So we are helping advise departments of transport. So I mentioned before, we work with South Carolina, we work with Texas, we work with Detroit, we work with various cities. We're helping them plan infrastructure. We're helping them reduce emissions. We're helping improve congestion on roads. We're helping improve safety. So we are aligned with smart city initiatives over the US and beyond.
Awesome. And then another question here from Carl. You talked a little bit about the retention rate and signing those deals. The question here is, how long are those contracts? Any insight into, the average length of the contract or some of your longest deals here?
Yeah, so we disclosed previously our average duration of a recurring contract is 30 months, 30.
Perfect. And then lastly here, we've got a question from Rich. I'm sure this is something a lot of people wonder when talking about connected vehicles. There are, of course, some security concerns. So what level of security is in place to protect your systems?
So we use various cybersecurity providers who do pen testing on an ongoing basis. We are ISO 27001. We're going through 27005 at the moment. We have hundreds of documented processes around data governance, security and privacy. Very much our DNA is about protecting data. WEJO to me means we journey. It's why I set WEJO up, is to have an open conversation with everyone about data or journey data in the car. Ultimately, I want WEJO to be embedded in the car as a recognized brand that protects your data. And that means we have to take security very, very seriously.
Awesome. Well, I think that's going to do it for our questions. Again, some great questions out of the chat there. Joining us on SPAX Attack, Richard Barlow, the CEO of WEJO, company going public with Virtuoso Acquisition, ticker VOSO. And Richard, correct me if I'm wrong, but the new stock ticker will be WEJO upon close. Is that correct?
That's correct. Yep.
Awesome. Well, way to nail down that ticker, with the company name. I think that'll help with the brand awareness and the recognition going forward.
Absolutely, and that's deliberate attempt. There's a reason why we have an aggregate of 5 million social media followers. We're pushing our brand out to be associated and be synonymous with data, trust, privacy, and security in the car. It's really important. It's really important that owns that. We own it.
Awesome. Well, Richard, thanks so much for taking time out of your busy schedule and joining us on the show today. We look forward to following the progress of your company going forward, and we'll talk to you soon.
Thank you. Thank you for your time.
Awesome. Well, you guys heard it. Another exclusive interview here on SPAX Attack. I mean, let's face it, we talk about automotives all the time. We talk about electric vehicles. We talk about autonomous vehicles, right? That's a favorite topic of Mitch's to always get into. And here you have connected cars, right? And I mean, Mitch, I knew this market was big and the potential was big, but when he broke down that slide of all the different target markets, I mean, traffic, insurance companies, and so many more. I think I underestimated the market size here of connected cars. What about you?
Yeah, I mean, it has a lot to do. I mean, if we think about autonomous, a lot of it is going to be about data, right? And so, I used to think of autonomous as the thing behind the thing, but might be the thing behind the thing,
Yeah, we might have to coin that phrase. I did see someone say that in the chat, the thing behind the thing. I wasn't able to sneak that into the interview like I usually, do. But yeah, this is the thing behind the thing. I mean, data and 17 OEMs and tier 1 customers. I mean, Mitch, you saw that slide. GM, Ford, Honda, Lucid, Fiat. I mean, all the big car makers. I mean, there's a couple not on that list, but the majority of them are there. I mean, this company has the potential to be massive. And that partnership with Palantir, right? When we talk about data, I mean, Palantir is one of the largest data companies out there. So the fact that they want a piece of the connected car data market, I think that's a bullish sign too.
Yeah, definitely, guys. If you guys haven't checked out, there is a video on this. This is what I'm showing you guys right now. You guys can check out this video after the show. It's really just kind of explaining kind of the different kind of aspects that WeJo does. And also you get to hear, like you just saw Palantir talk about why they went after this company. Definitely check it out. I think it's really interesting and going to be something that, like always, there's always areas where you just probably don't know where the underlining asset is. And that's what I'll teach you guys in this. I think this is a really important thing. When I first went to school for finance, that was one thing that a professor definitely stuck onto me. And he always said, find out where the underlining asset is and look for appreciation there. That will go ahead and help the company out in the long run and giving you the real thing behind the thing. That's the underlying asset there. And here it's all about data. And for these autonomous, whether it be also EVs, kind of proving that they can do autonomous, it's going to be a lot of it based on this connected data.
Yeah, definitely. I mean, that market is just huge. I really like this. I enjoyed this interview. This is one we've been trying to nail down for a while here. Some great questions from the chat too. I mean, the security question I thought was relevant and important. Yeah, we got to one of Sue's questions. And Carl, of course, again, our loyal fans in the chat, always feel free to drop those questions in. Yeah, and we do have the comment from Carl talking about this company being big and scary. I mean, I think when you look at connected anything, it can be scary, right? And that can be from, your Amazon Alexa in your house, that has data and can talk to you, all the way to your vehicle, having connectivity. So, but I think ultimately that's where we're headed, right? And if you're worried about security and worried about all that, I mean, ultimately, I think those concerns are always going to be there. And I look to this company having all those great partnerships and investments, thinking that they know what they're doing and that they have security under control. Otherwise, I don't think these automotive companies would have partnered with them, right? If you're GM, if you're Ford, you don't want to lose out on your, customer data. That could be a major hit to you as a company too. So I like WEJO, and yeah, VOSO. Mitch, how about the ticker, right? We talk about tickers. WEJO got the ticker WEJO. I mean, I think that's a big story there too.
Smart move. I'm glad you called that out, Chris, because you know how I always try to pay attention to if the ticker confuses you and the brand name isn't already so predominant, then you probably don't want to be even looking at a stock like that, because what's going to happen is you're going to get institutionals maybe taking a look, but retail will go ahead and just pass it along to the side. And so it's always important. The ticker, also the brand recognition. You heard them talk about they're building it up. They're focusing on their social aspects also, so they can continue building that brand and have that recognition. All right, that's going to do it for us on VOSO. As you guys can see, hanging out at 993, underneath 10. I'm waiting for the day it goes over 10, but this is definitely one that I'll keep on my radar. All right, guys, let's go ahead. Let's get to our watch list, see what we're seeing out there. 6% mover SMFR was moving up. Now it's only up about 3.76%. What is going on with this one, Chris?
I'm actually surprised to see SMFR moving up. I don't know if there was news. I don't think there was, but Mitch, I have to say that this was a former favorite of Kathy Wood's and ARK Funds. And I saw in my email that she is actually selling shares of SMFR. So sometimes that can be a red flag or a bearish call, right? When Kathy gets out of a position, but she's gotten out of some winners before. So maybe investors, see the bigger story here. And I think this could be a valuation play, right? I mean, let's face it, it's been trading under 10 for a while now. Maybe the bottom is in and it's starting to get the turnaround now.
All right. Well, we got a bug log in the chat, really, really animate about Miles. So I will let you know, hey, dude, just look up SPAC's attack. I think you might find something there. But yeah, we'll reach out to Mile. We'll get them back. It's definitely a company that I'm with you. I believe in the concept. I think Chris and I definitely believe in the concept. The question is, when does the story turn around? When do the technicals turn around on Mile? We'll see. So we see you in the chat. Don't worry. You don't get biased. Let's go ahead. Let's keep going. Let's get into the next one here. Oh, looks like some redemptions. ARKK.
Yeah, she does face redemptions right on a daily basis as people are selling out of the funds. But like when she's adding to DNA and selling SMFR, I think that's the difference here, right? Also skills. She recently started selling the position in skills, and she's been trimming that position every day. And I don't think that's just because of redemption. I think that's, her starting to exit the position. We saw that before with some of these stocks. Let's face it, these are large positions. She can't just sell the entire stake in one day. When you see a sizable sale for a couple days in a row, I think that's the sign that that position is going bye-bye.
All right, let's go to the next stock here that's coming up on my watch list. And I think we talked about this. Chris, I'm keeping an eye, a close one, on SPCE and seeing if this one's going to start the trend for the space stocks again. As we've been seeing, a lot of these space stocks have been taking a hard downturn, but it was first based off of this Virgin Galactic news, I think. That's when we first started seeing that big dip. And yeah, the other two, like the other ones started coming up, but what did it do? It followed the Virgin Galactic. And I think that's what really brought it down. We had our wave up when we saw the rockets going up, but we haven't seen another one go up, right, Chris? Isn't there another one coming out soon?
Yeah, so I mean, Mitch, follow the story, right? We've called space all year, right? And the big thing with this one is if you follow the story, you can make some decent money, right? And the story here is that the FAA said that there was no wrongdoing, right, in them veering off course. That was a concern for shareholders and a concern that we brought up, right? Because there was the possibility that would delay the schedule. Well, now that the news is in and the FAA said they're clear to fly, what does that mean we're going to get soon? We're going to get a date announced, right? Virgin Galactic, I fully expect, they've done this before, right? They will put out a press release saying, this is our next flight window. And what happens when they say it's the next flight window? Shares go up. That's happened all year long, right? As soon as they announce the flight window, shares go up. And if you were able to catch it before that happens, you can, sell the news then. But until then, I think that's the next big catalyst. And Mitch, I don't know if you saw this, but so rival to Virgin, Blue Origin, they actually announced a big celebrity is going to be going up to space later this year on their spacecraft.
What?
William Shatner, Captain Kirk himself, is going to space. And that got a lot of publicity, right? So the same thing with Virgin Galactic. Remember, if they have some celebrities that have booked flights, including Elon Musk. What happens when Virgin starts announcing some of those celebrities going up to space later this year or next year? It becomes a major media story. So pay attention to the story here with Virgin Galactic.
Yeah, well, we'll keep an eye on this Jackie also. I haven't seen Jackie in a while. So, Jackie, I hope you're doing good in your trading. Hope it's doing well. I remember when Jackie was actually a good fan of SPACs when they first started rocketing. Looks like she's coming back. Maybe the SPACs will come back too, John. We'll keep an eye out on this. But definitely SPCE, and she also mentioned ASTS. So let's take a look really quickly, see if we're seeing some bottoming action. Similar chart, just bounced off the 10. You know how I love it when they're right near that $10 mark. ASTS definitely showing up. And for that being mentioned, also in the chat was mentioned Black Sky. For that, just keep an eye out on all these. I think they're going to turn around, and there will be a leader, but I think they'll all turn back around. With that being mentioned, you can also watch my other favorite space stock, which isn't a SPAC, which is Maxar, which is also on the pullback. Let's see for this one to turn around and also maybe give you some insight on Black Sky.
And Mitch, we got Solar joining us in the chat. Already covered the DNA short report. We did. We covered it about 15 minutes in. So when we're done with the show, I mean, feel free to go back and look. You got to hear my mini rant about DNA and that short report. I think it was pretty enjoyable. So shout out Solar for joining us. But yeah, we covered DNA already in pretty good detail, I think.
All right. Some companies that I'm really starting to have concerns about are what's going to happen in the EV industry. And one thing that I'm starting to realize, Chris, is that there's going to be some leaders here. And we do have some leaders that are really starting to show the colors, right? And so one of the things that I'm looking at is I can definitely see the OEMs coming in fast. If we were thinking about this last year, was Ford, was GM going to really step in, and how fast were they going to step in? What did you see them do? They announced that they're increasing investments, right? And you see Ford increasing another kind of facility to just help that push that EV driver. Now I'm really starting to be concerned about stocks like Nikola and Ride that can't seem to catch a break with the catalyst. Not to talk negative about the companies, but literally the news that comes out, it just continuously is on a negative path versus a turnaround path that I could see them really coming into light. And so it gets to the point where, I mean, you keep seeing other companies doing and leading in towards that positive catalyst. It's very hard to take an approach, an investor's approach to Nikola or Ride it at these levels. What do you think, Chris?
Mitch, great call out, right? When Ford and GM are jumping into the electric vehicle space, I mean, that's a bullish sign for EVs, but it's also a big negative for EV companies, right? Because you have two leaders with a ton of money, a ton of experience, a ton of brand name recognition getting in that market. So I think that's very on point, Mitch. We have a lot of EV companies going public via SPAC. Will all of them be around in 5 years? I think no, right? There's going to be some losers. There's going to be some laggards. We're already starting to see that. And for that reason, Mitch, is almost where I go back to, the thing behind the thing. Find the battery companies, find the companies with the data, find the companies that are helping GM and Ford and others, because there might not be space for all these EV companies.
I agree. I mean, there's really, I mean, there's only a certain amount that you can get sold, right? I mean, the pie is getting bigger, but really, there's a limit to that pie, right? Eventually, that pie just stops or slows down on the growth, and that's what Tesla was fighting in the first place, right? It was, hey, we're the leaders here. We're gonna take the market share, and we're not gonna give it back. What's going to happen? That's what you guys got to determine as investors out there. I don't know. I don't think Chris knows. But one thing we definitely do know is the OMEs are stepping in. They're stepping in fast, and it's going to make it tough for these pre-revenue stocks that are trying to get out a prototype to go ahead and not only get that prototype out, but then get it sold, because as we know, GM and Ford have different avenues to sell these vehicles than a Nikola or a Ride, or even, let's say, GOEV or some of these other players. They're definitely going to have some struggled times, and it's really interesting to me because this is the next 10 years of our lives, and we all need to kind of open our eyes and try to pay attention where we should try to get our investments in. And it's going to be fun to talk about for sure.
Definitely. And you called out MP yesterday, right? MP Materials making the supplies for EV companies. So maybe that's where you look instead of the individual, auto companies. But that's going to do it for SPACs Attack today. Another great show, another great interview. It looked like a lot of people in the chat enjoyed today's interview. Let's smash that like. Let Benzinga know that you enjoyed the interview. Let WEJO know that you enjoyed the interview. And we have no show tomorrow. Benzinga will be running another all access show. You'll get to hear about some small cap companies that maybe you aren't familiar with. I know Arcimoto is presenting. That's one of the companies I know, FUV. They exciting product, and their stock has been on fire this year.
I'm a fan.
I'm a fan, and I want to ride it. So, Mark, if you're listening, I mean, we want one of those Arcimoto vehicles dropped off. But otherwise, we'll be back on Friday with SPACs Attack. But stay tuned. You got Power Hour coming up next. Don't go anywhere, everyone.
Yeah, I want to see if one of those bad boys can drift, but maybe not give me one, Mark. We'll see what happens. Up next, you guys got the Power Hour where the hype meets the stocks. We're going to have an interview from Cion Investment. Look it up, CION, on the New York Stock Exchange. Stay tuned. The Power Hour is coming right up. You don't got to go anywhere. This will take you right to that, and we'll see you a little bit later. Benzinga TV continues. SPAC's attack out. Chrisopedia keeps it going. Roadmap, if you guys didn't catch it yesterday, check it out.